Hey everyone, have you heard the big news? There's a massive trade deal between India and the European Union that's about to be finalized, and trust me, it's a game changer. And while the whole deal is huge, the one thing that's grabbing all the headlines is what it means for the price of your dream car.
So let's just get right to it. The question everyone's asking, are those amazing European cars, the BMWs, the Audis, the Mercedes, finally going to get a little easier on the wallet here in India? Well, the short answer is a big, resounding yes. And the change is going to be pretty significant. To really get your head around how big this shift is, you got to look at this number, 110%. That's the absolutely massive import tax India has been putting on fully built European cars. Think about it. A car that costs 1 crore in Europe would have another 1.1 crore slapped on top in taxes. It more than doubled the price before it even hit the showroom floor. Crazy, right? Well, that massive tariff wall is coming down. The new number on the table is 40%. That is a huge drop. And what's even better? The plan is to bring this down even more over the next few years, maybe all the way down to just 10%. This is a complete U-turn in trade policy, and it's happening now. So, how did this all happen? And what does it really mean for everyone? Well, that's what we're going to break down right now. First up, we'll explain that price drop and what it means for you. Then we'll zoom out and look at this mother of all deals. We'll dig into why India completely changed its strategy, check out the benefits and the protections that are built in, and finally, we'll look at the much bigger picture for India on the world stage. All right, let's get down to the nitty-gritty. What does slashing the tariff from 110% all the way down to 40% actually mean in rupees and paise when you're looking at that price tag? We're talking about a serious price cut here. For those premium and luxury models that are shipped over as completely built units, or CBUs, you could see prices drop by anywhere from 10 lakh to a whopping 25 lakh rupees on a single car. Now, this is mostly for the high-end cars, the real cream of the crop. And who's going to see the biggest changes? Well, it's all the names you'd expect. The European heavyweights, right? We're talking BMW, Mercedes-Benz, the whole Volkswagen group, so that's Audi and Skoda, plus Volvo and Jaguar Land Rover. If they import a car fully assembled from Europe, it's about to get a whole lot more affordable. So what's the engine driving this whole thing? I mean, this isn't just about cars. The car prices are just one small part of a much, much bigger story. It's all because of a historic free trade agreement, or FTA, that has been literally decades in the making. So what's an FTA anyway? Let's just quickly break it down. It's basically a formal deal between countries where they agree to make trading with each other easier. The main thing they do is lower or get rid of tariffs. Those are just taxes on imports, which makes stuff cheaper and gets more goods and services flowing between them. Now, what's really fascinating is that this deal didn't just happen overnight, not even close. You can see here talks actually started way back in 2007. But they completely fell apart and stalled in 2013 because the two sides were just too far apart. It took until 2022 for them to get back to the table and finally get it done. It's been a marathon, not a sprint. And there's a reason people are calling this the mother of all deals. It's because the scale of it is just enormous. It's not just about cars or a few other products. It covers a massive range of goods. It opens up markets for services, which is a huge strength for India, and it even sets new rules for investment. It's one of the biggest trade deals on the planet. Okay, so this brings up a really important question. For decades, India has had some of the highest car tariffs in the world, so why the huge change of heart now? Let's unpack the strategy behind this major shift. For the longest time, India's high tariffs really did three main things. Number one, they acted like a shield for homegrown companies like Tata and Mahindra, protecting them from a flood of foreign competition. Two, they pushed foreign brands to actually build their cars in India, make in India, instead of just shipping them over. And three, well, they brought in a lot of money for the government. So what changed? It all comes down to a strategic trade-off. This is the heart of the negotiation right here. You can see the give and take. India gave the EU something it really wanted, lower taxes on its cars. And in return, India got something it absolutely needed, much better access to that giant 27-country EU market for its own powerhouse sectors, like IT services, textiles, pharma, and jewelry. Of course, opening up a huge industry like the auto sector always comes with risks. So how did India make sure to balance the amazing benefits of this deal with the need to protect its own local industries? Let's look at the fine print. First, let's just appreciate the big wins for India here. The gains are massive. We're talking about sectors like services and IT, which are the backbone of the modern Indian economy, not to mention huge employers like the textile and pharma industries. They now have a much clearer runway into the European market. This was the grand prize India was fighting for.
But, and this is really important, India played it smart. They didn't just open the floodgates. There are some clever safeguards built into this deal. There are going to be quotas, which means there's a limit on how many cars can even come in at that lower 40% tax rate. There are also super strict rules of origin, which basically stops, say, a Chinese-made car from being rerouted through Europe just to get the lower tariff. And crucially, this whole thing doesn't even apply to the cheaper mass market cars, which protects the bread and butter of Indian automakers. It's a controlled opening, not a free-for-all.
And here's a really smart part of the strategy, the big difference between how they're treating regular cars and electric vehicles. While the tariffs on petrol and diesel cars are getting cut right away, the taxes on EVs are staying exactly where they are for at least 5 years. The logic here is pretty simple. India's traditional car industry is well established, it can handle the competition. But the EV industry, that's just getting started. It needs time and protection to grow strong on its own.
Okay, let's zoom out for our final section and look at why this deal is so much more than just economics. It's actually a brilliant move in India's larger geopolitical strategy. You see, for years, a key goal for India has been to diversify its trade partners, so it's not too dependent on any one country. This deal with the EU is a giant leap in that direction. The EU is a huge, stable, and predictable economic partner. Forging a stronger bond with them creates a really important balance against other relationships that can sometimes be a bit more unpredictable. At the end of the day, the message this whole agreement sends to the rest of the world is crystal clear. It shouts that India is open for business, that it's a reliable and predictable partner you can make long-term deals with, and maybe most importantly, it powerfully reinforces India's position as a top-tier investment-friendly destination for manufacturing, a real, credible alternative on the global stage. So yeah, while cheaper luxury cars are the fun headline we're all talking about, this deal is really about writing the next chapter of India's economic future. Which leaves us with one final big question to think about. Just how pivotal will this partnership with Europe be in cementing India's place as a true global economic superpower for decades to come? Thanks for tuning in.